what is the right capital stack for companies focused on this topic, given the maturity and level of development they're likely to be in right now? How do you think about kind of marrying and stacking different sources of capital across the development journey for folks who are focused on critical minerals?
Happy to share more of that. I spent a number of years in banking. I spent half my career in banking and the other half at a startup. So I have a little bit of a perspective from both ends of the table, if you will. And I think there's just similar trajectory for a lot of us folks on the startup side. And Abigail had mentioned the US government has been a very strong supporter for critical mineral technologies and projects in their earliest life cycles, right? Looking to spend money in early stage R&D for new process development and new refinery and new methodologies of extracting critical minerals out of different types of resources. And that's all fantastic and great. And that's really the early stage where you're looking at TRLs of maybe, 1 to 3 or 4, right? And then as you get through those earlier stages, you might have technology coming out of a lab, whether it's an national lab or a large research institution. You might get some traction like Mariana has had raising venture capital, right? And to take it to the next step, looking at commercial development and improving out a demonstration pilot case. And those are the cases where it might not be a huge amount of expense. It might be a couple million or a couple, tens of millions, but those are what is potentially available from the venture capital side. But as you look to go further in commercializing the technology, when you actually look at the implementation of the technology, yes, one way, as Darian had mentioned, is these companies could get acquired by a very large mining conglomerate, right? But oftentimes that's not the available pathway, if you will, depending on where the stage of the development of the project is. And also it might not be the most ideal option from a return standpoint, or it might have a very hard time convincing the potential acquirer on the availability of resource, on the ability to execute and all those things, right? So to the extent that many of these do involve a significant degree of technology risk, where is that missing middle? Right? It's the capital stack that's needed to take it to that next level to actually execute on a project. So you can go to an acquirer after you've executed your first project and say, hey, I demonstrated this my technology works. It will produce, X amount of output and yield, and for whatever resource that is we're looking at. And that's a much better position from a negotiation standpoint than before you actually had a project executed, right? And so what we attempt to do from my team standpoint, the Sustainable Solutions Group, is to provide that missing middle to the extent that there is a lot more work diligence required to undertake the review of the technical feasibility of the commercial proposition. That's what we seek to provide. We are different from a venture capital investor in that we primarily focus on debt instruments, specifically project finance. We're looking to bank against the cash flows of a particular project and not exactly on, is the project developer investment grade rated, right? A huge conglomerate that has X number of employees and brings in billions of dollars a year in terms of EBITDA. We're really looking at specifically what is the economics expected from this project, and is a technology likely to work or not, and are there ways we can mitigate around with specific financing structures and lending structures. And I think we offer a very important role with our product in the market in that the alternatives to what we offer, right? And there are different alternatives out there, whether you're looking at venture debt, which has higher cost of capital than bank financing like we would offer. You also have potential private credit lenders who also have significantly higher cost of capital, given that they're looking more at it from a corporate perspective, right? And so I think we can be a very helpful lever to put into the capital stack alongside some of these other options, or alongside immigration investors, which are also another pathway that's being explored by some companies at this point, to lower the overall cost of capital as you seek to scale up your project from a demonstration TRL level of maybe 5 or 6 to get to a TRL level of 8 or 9 that becomes commercially ready to scale further.
Very interesting. So it's that first of a kind of project space is where you guys are focused on and see there's a real need across the capital stack as projects go from what could be to what is multiple times and therefore is part of a much larger operation.